Today is March 20th. What a historic day. The last couple of weeks have just been absolutely amazing. We've got banks failing. We just had the Credit Suisse collapse. We've got the federal funds a meeting this week. Where are they going to raise? Or are they not? We've got turmoil in the markets. And today I have a special guest, Charles Nenner. What a great day to have you on, Charles. Everybody is going to want to know what your thoughts are and what your charts are saying. How are you today? Thank you so much for coming on.
You're welcome. Well, we're back on, and there's a lot going on in the world.
Boy, that's an understatement. You and I have been around for a long time, and these are one of those times you just don't see days like this absolutely every single day. So let's go right to it. What do you think is going to happen this Wednesday? There was a big consensus 2-3 weeks ago that the Federal Reserve was going to raise rates. What are your charts saying?
Well, the charts say that they still raise rates till the end of 24. The question is, why is it important? Let's say they don't raise rates, or they will be that crazy, which I don't think, they lower rates, then inflation will go through the roof, and then they have to double it up the next time. So the question is, why are we so interested in what they're going to do next week? I never really understand that. We know that we're going to have higher rates and for another year and a half. And if they skip one rate, I don't think they do it. The news seems to be a little bit more stable about the banking system. And if you look at the chart that you show later from the banking index, the cycle is close to bottoming a little bit. So I think most of the problems are over short term. But as you see later, we show the weekly S&P cycle still down. So I guess there's another problem coming up. We don't know which one. Like when you show the banking cycle topping, there was nothing going on. And before you know it, banks are in deep trouble. So when one problem is over, it doesn't mean that another problem is not coming around the corner. I don't think they can be making a fool of themselves and not raise rates, because then everybody says, oh, now inflation is going up and it's going to be even worse. So I don't think if it's even good for the market. Maybe short-term people who don't understand what's going on might say, hey, we're going to buy some stocks. But the insiders will not do that.
So in reading that, you think there's a possibility that they're going to continue raising, and maybe they don't raise as the full extent that they were going to, but you think that they're going to continue on their mission and to get rid of inflation?
I don't think they get rid of inflation. It's a dream, because if you look at cycles, inflation goes in cycles, and it's just started. What we had is it goes up in waves. We had the first wave, which almost hit my target of 12%. It hit it in Europe, I'm from Holland. It even hit 18-19% in Holland. And the experts that say that if you really calculate the way you should calculate it, it's at least 15%. So now it's taking a rest. And in May, the cycle is bottoming again, and we have a new up move in inflation. What I'm worried about is that the Fed always says, well, we look at the data from months to months. Don't they have a long-term outlook? Don't they know how inflation develops? I would almost say, why wouldn't they take a subscription on my cycle work? But it's very strange. If that's really what they're doing, then it's very worrisome. Now, we had people like Greenspan, who really was not a very good economist before he got to the Fed, also not in the Fed. We got Yellen, who I don't have a high opinion of. And Bernanke took all the risks he could in order not to have the market collapse, because nothing could be worse than what he did anyway. So I don't think that's great. I don't think Powell has the real deep insight what's going on. And I'm very worried about the state of the United States.
Well, I can well understand it. You and I have talked about social unrest for a long time. It's certainly been on one of your charts. There seems to be an awful lot of divisive forces here in the United States. My feeling is that America has always been a great melting pot, and we're more concerned with not what you are, whether you're a Norwegian or you're French or you're from China. It's who you are. And this has always been a great opportunity. And it seems like we're getting awfully divisive here in the United States, and they're trying to decide, put into everybody into parcels, and it's this parcel against that parcel, this tribe against that tribe. I agree with you wholeheartedly. I think we need to remember that we're all have the same goals. We all have the same thing. We want our families to do well, our kids to do well, and everybody's the same. So in America, we had the great melting pot. You came from all over the world, and you became Americans. So we need to remember that. Thank you for
But
that.
do you know most Americans don't know that there is some ships going around doing some exercises, American ships, and they're being joined by a combination of China, Russia, and Iran in the Middle East. I don't think anybody realizes what's going on over here. They can finish the United States in 2 minutes because they got the supersonic rockets, and the United States has no defense against it. More than that, they might give it to a proxy. They might give it to Iran because Iranians are not so afraid to die. It's they're martyrs, and I don't think the United States has anything to compare to. So, like my wife says, they do these things, and Biden talks about washing machines. I didn't hear it myself, but it seems that that's an item that he talks about. So now we have Saudi Arabia becoming part of the BRIC countries. So we've got Brazil, we've got India, we've got China,
Yes.
we got Russia, we got now South Africa, and now Saudi Arabia. The story is, and I wrote that today for people who are much younger than we are, that in the 70s, the dollar went off the gold standard. And Kissinger went to Saudi Arabia and says, can we connect the dollar to the crude oil? Which they did. So now they're still being paid in crude, which made the dollar still the major reserve currency in the world. But it's going to be over very soon because these big countries, going to develop their own system, which means is that the dollar is really going to collapse, which means that they're going to throw all the bonds they have in the crash, and the dollar is going to collapse, and interest rates will go up, and inflation will go through the roof. And I don't hear anybody having any idea what's going on. They're busy with doing this Ukraine business, I think because they want to have a war economy to keep the economy going. And I already heard that, when Ukraine finally is stopping the war with Russia, then the American companies will come over and get hundreds of billions. I don't know how much they're going to create a new society in Ukraine. Maybe that's why they throw hundreds of billions to Ukraine. I have no idea what's going on. But the Americans let everything happen until it's too late. I don't hear anybody. My clients are very much worried where to put the money, where to be physically going to be safe. But I don't hear anybody being worried. We're only worried about who uses which toilet.
Yeah, there's no leadership in our country. We're too divided. We need to kind of start focusing on what's best for America. I think you're right. These issues are kind of silly issues a little bit. We have much greater fish to fry, so they say. So and people do want to know where they should go. Should they be starting to think of going to gold, Charles?
Well, the gold, we were long gold, and it reached our short-term price target today of, what was it, 2016?
Yeah.
Was the target, and the short-term cycle is stopping, so I expect weakness one more time. And then in May, it will really start taking off. People are going to realize, investors going to realize that we're in big trouble over here. And the facts are the same, the facts on the ground, just nobody realizes it. I mean, the United States has a big deficit, and most of it is in short-term rates. So look what happened in the bank in was it California? So they had no idea. They got into long bonds when we had a sell signal, when bonds were giving, what was it, 1% or so. And when people want the money, they have to sell all their bonds and have a major losses. And we have the same thing with the United States. They thought, interest rates, short rates are low, so we can borrow very cheap. In the meantime, they're shooting up, and it costs them a lot of money. Mm-hmm. And like I said, if people don't trust the United States anymore, rates will go even higher, and the United States can't handle it anymore.
Well, on charts other than yours, we look at liquidity, Charles, and we've seen that the liquidity has just been drained throughout the system, all across the globe. There's no cash, there's no liquidity, and of course, liquidity is the fuel for the economy. We're actually at the lowest liquidity globally ever, and ever is a really, really long time. Like never ever happened before. So, these guys are having to force to sell assets and losers. You and I talked about that in November of 20 to get out of the bond market.
Right.
We were talking about that a long time ago. So the bond market, bull market is over, and you're in jeopardy. And you're absolutely right. And I think this is happening in Europe too, Charles, as we talk, is that a lot of these pension funds, the states and the governments made the pension funds buy government bonds below zero,
Yes.
negative. And of course, when you got a negative bond and interest rates rise, that is a death knell for those bonds. I'm understanding that some of these pension funds took 70-80% losses on their portfolio. Is that correct?
Yes, it's just amazing who is in charge of all these funds. It's all the old friend politics and people in charge who have no clue about financial history. Because if you had some idea, then you wouldn't buy, that bank would not load up in bonds that give 1%, because, not forever, bonds will give only 1%. Of course, there's going to be inflation. And I don't want to repeat it because my work, you have to look in cycles. You have to know when it's going up, when it's going down. And if you have no idea, you shouldn't be in the position.
Right, and I understand they didn't have a risk manager because they had a equity manager for being concerned about being equitable with their staff, which is okay. I mean, it's a very human thing. I mean, we like that, but they weren't paying attention to the risk. And of course, we have a constantly changing economic environment, so you really need to pay attention. Charles, I don't mean to be an advertisement for you, but your cycles always let us know a little bit ahead of time. So let me just come back, because everybody's going to ask us, do you think that the Federal Reserve will raise interest rates Wednesday?
I think they still will, 25% probably.
Okay.
But like I said, I don't know why that's important.
Well, it's just a talking point for a lot of our commercial banks and stuff. And so, speaking of commercial banks, you think that the crisis for the commercial banks looks like, according to your charts, maybe it's coming to an end, and maybe this is the last.
Short term, if you can, I don't know if you can bring up those charts, and then you can see exactly what's going on.
Yeah, I'm sure we do. Can we bring those charts up? Let me see if we can get those up. This is the S&P. Let me go. I'm almost certain we have. There's the bank index there. So there's the bank index, and this is your chart on the bank index. And look at the advance notice you gave on this.
That's always the interesting thing is, and that's why people find it hard to believe in cycles, because cycles stop and nothing is going on. And then when they go down, something has to happen. And of course, you get a banking crisis. You don't get a banking crisis when the cycle is up. You get a banking crisis when the cycle is down. Just the attitude that you have to develop is, I don't know what's going to trigger it. The cycle tops and things will go down. The cycle bottoms and things will go up. It's an emotional problem for most investors to deal with.
Well, they don't want to believe what they're looking at, and I've been with you for so long that I'm not concerned why, I'm more concerned with what. And right. So now we're looking at a daily chart here. Do you have your weekly charts? So
yeah, we have a weekly chart also.
Is this bottoming?
Not yet.
No, I don't think I've got that with me at the moment on this one. So not yet, but foreseeable future. So most of the damage is probably done.
No, it's done, but then you get a bounce and then it continues down again. The situation is very, very dire. The whole financial system is very shaky. And a lot is under the cover. It's what happened with Madoff, for instance. If there would not have been a market crash, nobody would have figured out. And the same thing with Bitcoin. I forgot the name of this guy. If the Bitcoin would have continued up, nobody would ever find out. So there's a lot of things that you only find out when markets crash. And now it's the banking sector, but I think there's much more going on than we really know.
Well, Charles, you and I have talked off camera. So, where should people be putting their money now? We've got gold coming. I know this is coming up on your chart. I don't know if I have a chart with it, but you and I have been talking about this for a number of years, and it's coming. It looks like it's close. Should they be buying some physical gold to keep for their families? Should they be switching into gold and silver coins and bars?
Yes, I think so. Just I sound very negative today, but have a lot of inside information. And we could get to a situation that they're going to confiscate gold and silver that people have. So you have, I'm dealing with this now. So the companies that you can buy gold and silver and put it away in Europe, Switzerland, for instance. And I tell people once it's there, after a while, take it out and put it in your own locker. Don't keep it in the locker over there because they might go after those people also. Because, I think that we're in for a terrible time. What we're dealing with today is which currency longer term do we want to be into? I don't have much experience with the Chinese currency, but it's very hard to decide where to go to. Maybe the Swiss franc. It's easy to say that we don't trust the dollar at all anymore. So in which currency you're going to be? So especially for Europeans, Obama made it very difficult because Americans cannot have accounts overseas. So you're kind of stuck.
Well, we're still here in the United States. We can get gold, we can get silver, we can get silver coins, and take them into our possession. This would be a great way to store some of our wealth out of the banks. And again, we need to make this perfectly clear that when you have your gold and silver, you don't want to put it into a safety deposit box. You want to take personal control of that. So don't leave it in the banks. Maybe take it at home and bury it underneath a big rock in your backyard.
Right. You have to do something, but we have to be original thinkers. It's not that easy anymore these days.
No, and so you think the U.S. currency, the U.S. currency, of course, is it's a reserve currency, and there's a lot of currency around. So, it would be very difficult for, say, Apple to convert $700 billion in their reserves in dollars into yuan because they just don't have that volume of currency around. So this is something that may be in the works, but this dollar collapse that we talk about, because we do have a chart coming up. This isn't imminent. This is something that's going to happen over a period of time, is it not, Charles?
Correct.
So you think the yuan may be taking the preeminence away from?
Well, maybe the BRICS countries create their own currencies. We have to see and wait. It's just that I'm always early because cycles showed me what's brewing out there. And I see now that, we have to watch and we really have to think what to do and where to go. So I think they will come with an anti-dollar, whichever currency it is. Now, the euro also doesn't look good for the long term. So the question is, where do you go?
Right, and of course, these currencies don't end overnight because there's commerce. So everybody needs some kind of an exchange of commerce. And really, the currencies are nothing but the median for doing this, but they need to hold their value. So we have some flux. So what should we tell our listeners, Charles? Is we have some turmoil coming, a lot of turmoil. You and I have been talking about this for a number of years. It's now at our doorstep. What should someone do? What should a family do here in America? What should just a normal family? What should they do?
Well, we talked to that before. We said if you own your house, watch our research, and when we say the housing stuff's going down, I mean, real estate already, I don't know how it's in the United States, better than me, but in Europe, it's really coming down 10, 15, 20%. And I told even the pension funds, just go short the stocks, the home builders, and for smaller investors, buy puts on the home builders. So whatever you lose on your house because you won't sell it, you can make back on the derivatives. You have to be active. Of course, the housing price, if there's not going to be a major war, the housing prices will come back, but it could take another 10 years. And because of inflation, if your house is worth $1 million, the million doesn't have the same buying power in 10 years as it has now. So you have to be a bit active, and for that you have to know what to expect. Look at cycles, look at price targets, and it's worthwhile in the end if you put in some work.
So the average family, do you think they should, for here in the United States, we have to have a currency. So the United States dollar, of course, still a reserve currency. Would you suggest people to have cash at home out of the banks?
Well, not yet, because that I work with these cycles, and you see that in a couple of weeks there's a tradable low in the banking index. So it's not going under right now, but it will after that. So you just have to watch the cycles. It's still like a mysterious thing, because it's not that the banks go down because there was a problem. The banks went down because the cycle went down. It's the cause and the result is the other way around. But again, that's emotionally very difficult for people to follow and to understand. So you have to get used to things are going to happen. We don't know what. Interest rates are going up. We don't know why. The Fed might go up, but the interest rates are down. We don't know why. We just have to know the facts. Like you said, we worked together for a couple of years. The important thing is to know what's going to happen and not why it's going to happen.
Okay, so for the average family, we don't have a crisis yet. It's still brewing, and it's coming to our doorstep. You know, these things often go slowly, then all of a sudden. And, you know, all of a sudden it's too late to be getting stuff into your house. So my advice to a lot of clients has been to start bringing cash into your home, get some precious metals into your home. Doesn't hurt to have extra medicine, some extra food in the house, extra water, just in case we have supply chain disruptions. Would you say that's good advice?
Yeah, but you have to understand that in my cycle work, it shows from May, inflation shoots up again. So what if you have 20% inflation? And what if you already, a lot of people prepay a house that still has to be built, and then the prices go up so high they can't even afford it anymore, have to walk away. I hear a lot of bad stories. I think I gave you one of the examples about the original thinking. So I am from Amsterdam, and because of the war in Ukraine, the gas, electricity prices went through the roof. So I had friends who went to a nice hotel in Spain. They closed the house in Amsterdam, and being in Spain in a hotel was cheaper than staying at home and trying to warm up your house. So it needs some original thinking.
Well, and kudos to the Netherlands. I saw you just had a historic election over the weekend, and the people, common people, would form their own political party, and it looks like they're in the process of kicking out the politicians that cause all these problems. So good for them.
But it's everywhere in France. There is everywhere. People, you know, this is part of what's going on. People are very unhappy. And the leaders that go to Davos and make between them agreements how they're going to run the world has been discovered what they want, and they have their own thing, and a bit narcissistic, and they don't really care about the people, and the people are waking up. So we're in for a lot of trouble, especially this thing with Ukraine and Russia, that is much more complicated than people think. And if China is, and they are, going to support Russia, and Russia works together with Iran, I don't understand how Biden has anything that he can support Ukraine, because like Biden said to Zelensky, I read that he says, well, we told you that we're going to support you as long as needed, but we didn't say forever. So the question is, when is forever, you know, when is as long as the need is finished?
Well, I you know, that's a whole different. We do a whole different video on that one, Charles. That's. I think people are going to look back in this period and go, "Wow, what were people thinking? This was the craziest time." Can we go to? Let's go to the chart. So let's do that, because we're going to have a lot of people going to want to know what's going on in the stock market. Let me go back to this is the bank index. So let me just reiterate. So the bank index is bottoming. So this crisis is going to kind of go by the wayside for a little bit. It looks like it's going to resolve itself for a little bit, but it's not going away. This is just kind of a temporary lull, and then it's going to get worse.
Because as you see on the bottom, the right side, it says daily cycles. So it's a very short-term cycle low.
But people can be a little more reassured that their banks are going to be safe for a short period of time, so they're going to be able to have some time to make some plans.
They have to make some plans. It's not over yet. I think the whole system is very close to going under. It depends how fast these BRIC countries get that thing under control.
Well, it's certainly going to pay attention. So let me go back to our first one, because I do have these in a little bit of an order. So here's the S&P. Now, you've been talking about the S&P being close to a breaking point. Did it need to hold a 3,900 or 39 something?
Yeah, 1,300. But as you see, the cycle is down. Well, it doesn't show there, but cycle is down into May, June before you get a tradable low. So something is going to trigger, and don't believe all these people say it's a buying opportunity. It's always a buying opportunity. I never hear in the media it's a selling opportunity. So it's not a buying opportunity, and it will take a couple of more months until we have a tradable low.
So what should someone do? Do you think they've missed it? Are they still able to save some of their money and sell at this juncture? Or have they missed it?
We went through this before. I don't like to give opinions in the middle of a move. I can tell you when a top is and when a bottom is. And in the meantime, it goes sideways, goes up, goes down. It's much more complicated. I guess now you just have to sit it out, although you can see a big down move still. I mean, S&P 3,200 is still possible. So that's a lot of pain.
Well, that's a lot of pain. Yeah, people would be panicking at that point. So possible 3,200. So we're at 3,900. That's a pretty doggone big move, Charles.
Yeah, correct.
Wow. Well, okay, and that's coming here between now and June.
No, the real cycles are down until November. So I think there's a bottom May, June leading to an up move and then going down again into later this year.
Wow. Okay, so the whole year is going to be very volatile.
Right.
Well, there should be a trading opportunity for someone who is paying attention. So we're going to have, just like you've been doing for gold for the last couple of years, you're going to have an opportunity to get in and get out and trade, but this is not going to be a buy and hold opportunity for people.
No, we always trade the VIX. Like the last trade of the VIX, we bought around 19 and we sold around 31 in a week time.
Yeah,
just when the cycle bottoms, we go long the VIX, and when it tops, we go out the VIX. So the VIX is a nice way also protect your portfolio, but you have to do the timing a little bit. You have to watch a little bit what we're doing.
Yeah, VIX is a trading vehicle. It's not something that you want to hold. So this is certainly not going into a buy and hold, at least in these marketplaces at this point. Gold is probably going to be a little bit more of a buy and hold, will it not?
Well, I think we went to this before because the power of buy and hold is, let's take gold. Let's say you buy at 1,800 and it goes to 1,900 and it goes to 2,000 and back to 1,900. So it says it's a buy and hold. I'm in there for the long term. But then it goes to 1,850. Okay, I'm still a profit. Goes to 1,700, 1,600. You can handle the pain. And my experience is all these people are long for the long term, selling out just when the cycle is low. And then it bottoms, and then you have to go long, but they have so much pain, so they miss the next up move. So I don't believe people are strong enough to buy and hold for the longer period.
Well, but in these extraordinary times, we're going to have to find some kind of vehicle where we can hold some wealth. And if gold has got an upside coming for the next several years, which I think what you and I have talked about, then someone's better just kind of bite the bullet and accept this volatility so that they can maintain their wealth. Would you say it's a good strategy?
I don't believe in that. I tell you, if you're long gold for the long term, it goes down $200, you get afraid and you sell out.
Well, that would be counterproductive for sure. So we have to, I guess what they have to do is really have a strategy on this thing, huh? I mean, you have to really understand a little bit what's going on, but we're into very volatile times, Charles.
Well, you can't understand a little bit what's going on because you cannot predict the gold price. The only thing is, like I always say to your friends and listeners, go to charlesnenner.com. You get it for 30 days free. You can see how we do it. And there you have the gold cycle 4 times a week. Do something good with it. And if you do well, maybe you want to be a subscriber. But at least take a look now that gold is so volatile and might be taking off. Take it for 4 weeks a subscription, which is totally free.
Yeah, it's a no cost a proposition. Can we take a look at the next chart? I think we've got Dow coming here, do we not? We go to the next one, because this seems like it's mimicking the S&P. This shows this is a daily chart as well, and this doesn't bottom until up here in this upper left-hand corner, April of 27.
April 27th.
Wow. That's over a month of down. Wow, that's a pretty ugly chart, Charles.
Yeah, but if you look at at the bottom is the cycle work, and if you see that it actually hits every top and every bottom, the logarithm was really very good. And of course, we don't know if the market bottoms on April 27. We'll talk again. We don't know why it goes down till late April, and we don't know why there is going to be a bounce starting late April. And the same thing that you asked me on the Fed, I don't really care. I just have to know what's going to happen, and I don't care why and what influence it has.
So someone, if they haven't sold their portfolio, perhaps they could get a little shorts in here, or some puts, I would guess, and protect their portfolios. Would that be a good strategy?
Again, if they would watch for free my research, I would take responsibility, because to buy puts, the premium runs out, so your timing has to be perfect. So you have to know exactly. This is a daily cycle. We also have hourly cycles, as you maybe know. We have intradays that tell you exactly what time the Dow Jones starts stopping and how many hours it goes down, and then you can start with the derivatives. But you really have to know what you're doing.
Well, I'm searching for some place to help these just normal families, and it seems like this is something that you really have to pay attention to. They should probably, we talked about getting out of the bonds in November of 20. They probably should have gotten out of the equities, and they wouldn't have to worry about this. That's probably what they should have done.
Yeah, but at that time, I remember we talked about the bonds have been in a bull market for almost 40 years.
Yeah.
And nobody ever believed that there could be an end to it. And the same thing when the stock market went up, nobody ever thought there would be an end to it. And that's always when the end comes. So I remember selling the 30-year bonds when around 190, and it went as low as 120. Can you imagine? That's a lot of money.
Phenomenal. And a lot of these people, that are in positions of middle management have never seen a downturn, Charles. If they're 35 or 36, 40 years old, they don't remember the last time when we had this.
And this is a longer term situation, because don't think that the next couple of years you have another bull market. No, you will have a sideways market like in Japan in the 80s, and then you go much lower again. You remember, maybe we still have a downside price target on the Dow Jones of 5,000.
Well, let's see if we can find something here to cheer us up. Let me go to my next slide. I think we've already talked about the bank index. So at least that one's bottoming for a little bit of time here. Here's the dollar cycle. Now, this is a very, very telling chart here, Charles. So when was this peak? Can you see? I can't see on mine when this peak.
The peak is the summer of next year. So this is a monthly chart which I made because we talk about the problems the dollar can have. So we want to know what the cycles show. So I made a long-term chart. It's not good for timing, but it gives you an idea that the dollar is not going to be in huge trouble until next year.
So actually, it looks like it's going to peak. So in my world, whenever you get a very, very strong dollar, it's telling us that we're going to have turmoil across the world because people are going into the reserve currency. So this is June of next year?
Yes, but it doesn't mean you get it very strong. It only means that it's not coming down. If with this system, you don't know how strong the up move is. You just know the direction is up. So it doesn't mean it's going a lot higher, but the direction is still up.
Well, that tells me things are not going to be well in the world. And of course, the dollar cycles. I've had consultation with people. I think the U.S. dollar was 82 or so, not in 2010 or 2012. On the DXY, it was significantly lower at that time, was it not?
Yeah, we talked about at that time we had a target of 114. It went to 114. and then it's sold off, and it's actually on a sell signal. So maybe it goes back to 114, but that's all we had. Like when we talked half a year ago, there was a price target.
But the US dollar could drop significantly.
Yes, yes, especially when monthly cycle top. And I'm not a fundamental analyst. I know my stuff, but not better than other people. But I can understand why the dollar is going to get in trouble.
So if for us as Americans, if we have wheat expressed in dollars and our dollar weakens and people are buying our wheat all across the globe, that means locally here, wheat's going to go up because our dollar is weak. And
Right,
that's
and you should know that a huge amount of our treasuries is held by the Chinese. And if they don't trust it anymore, they're just going to sell the bonds, and whatever the economy does is not interesting. Just interest rates are going to shoot up.
yeah. So it all ties together. It certainly does. So if we had a much weakened dollar, that would cause a lot of inflation here at home. We'd be importing inflation into our world. Right now, we're exporting inflation because we got a strong dollar. Very similar to what Turkey, I think, is doing. Turkey's got a terribly weak currency, and everything is expensive in Turkey in Turkish lira. Let me go.
Yeah, but Turkey also wants to connect to the BRIC situation. So I guess a lot of countries are going to join that. And again, I think the United States totally underestimates what's going to happen.
Well, it's a loss of confidence for sure. I'm sure that they don't know where we are or who's running this thing. So, and here's the retail cycle, and this looks like it's May. It looks like it's mirroring.
Yeah, this is down into May this year, and as long as the retail doesn't pick up, I don't think the market picks up. So it's another confirmation that somewhere in May we're going to have a tradable low.
And that's a pretty big waterfall effect right here. This drop. I mean, it looks like it's over a very short period of time. That drop. Is that right?
Yeah, but again, don't look at how strong the drop is going to be. This just tells you the direction is down until the cycle bottoms.
Well, it looks like the next few months are going to be pretty interesting. Now, here's that 30-year bond that we're talking about. So. People have to remember that the bonds are inverse to interest rates. So when the bond goes up, that means interest rates have come down and the value of the bond has gone up. And it looks to me like we're pretty close to a top, huh?
Yes, this bounce was predicted by the cycle, and the cycle is stopping in a few days. And so I think the bonds come down again. Now, from that, maybe you can think what's going to Fed going to do. I mean, but it doesn't pay to make that interpretation because you never know if the news is already in the price. So you really don't know. I mean, if people all expect the Fed to do 25%, then if they do 25%, it doesn't do anything. So I think everything is already in the price, and the bond market, the rally in the bond market is almost over.
So this is going to affect virtually everything that's financed. I'm going to guess. So this would mean autos and credit cards, anything that you're going, any of the industrial and commercial loans. Everything looks like interest rates are going to go up pretty quickly, and this is for a very long term. Is that not correct?
No, it's not so long term. I don't have it in this chart, but there is a reasonable low, I think, in the middle of the year. Then we're probably going to buy back some bonds that we have been out for 2 years.
Oh, well, at least we get a glimmer of hope. That's great, Charles. That's good. That's good for my business for sure. We like to hear.
That depends for the reason, because if gold goes up and bond goes up because the world is in major trouble, that doesn't really help us.
Oh. Well, that's true. I guess people are going to go to those 30-year bonds if things are having problems.
Yeah.
So that's all the charts I put in on this, Charles. So again, this is just a smattering of what you send out. So thank you very much for including me with your research. But we just get so much content when you send it to us. It's just absolutely amazing. We're just absolutely amazed at the at the research that you're doing on this. So let's just recap here. So it looks like turmoil is coming. You and I have been talking about this for a number of years. What we've been talking about is here. It's at our doorstep. It's not going to go away. This is going to last for another few years, I'm going to guess, huh, Charles?
I just wonder what would happen if Putin would go to Mexico and put all his rockets over there and would say, listen, Mexico is independent. They can decide what they want, right? Like Biden says, Ukraine can decide whatever they want. I wonder if the United States would accept that. I think that will be a nice try and see really where the truth stands.
Well, I'm sure we would not like that, Charles, and we would be very, very upset with that. So as far as I'm concerned, I would like to see peace in the Ukraine. I don't see anything to our advantage to continue with conflict there. But your charts say conflict is just going to continue for a number of years, and we're going to have civil unrest in the next couple of years too. Don't you have your civil unrest charts have been saying?
Yes,
that?
and my war cycles are up, and soon, I said the middle of this year, the more cycles going up. So we should have more explosion in war situations in a couple of months.
Well, and you can see all across the globe, virtually everywhere, people are really upset with their governments. You know, they're really, really, really upset. So that's right along your chart. You never said why. You just said what? We're going to say of civil disobedience. And my God, you nailed that. That is absolutely what's happening.
Yeah. It's actually, they think they come up with them themselves, but actually they don't have free choice because the cycles is turning up, and that's why they are very unhappy.
Is it still up from here, Charles?
They're still up. You remember, I think in the year 2000, everybody had this T-shirt, "Don't worry, be happy," and that was the end. When people walk around like that, that's the end. From then on, you have to be, you cannot be happy anymore.
Well, we still need to be happy.
No, but there's a reason for these things. You understand?
No, I do understand.
When you go from one extreme to the other extreme, so the extreme on the downside is not over yet. It's not. People are not worried enough, so it's not over yet.
Well, you know what's amazing with these cycles, because we have a timing model in our real estate, and you told me that the timing model was finished, and it was. It came in about 6 to 8 months earlier than what I thought it was, but you were absolutely correct on that. So our housing market did peak in March of 2022. You called it, Charles. I thought it was going to be later. I thought it was going to be towards the end of the year, but you were correct, and it is exactly following the cycles. It's just, when people say, well, why is this? Well, it's just part of the cycle. I don't know the mechanics of it. It's like in my business, everybody's buying a house, and then everybody who wants a house has bought a house, and the market changes. Something comes along and changes it, and it's following the cycle. So if you're telling me we've got war cycles and we've got civil disruption, I am a believer. I believe you're absolutely correct, because I've been with you for a long, long time. And what you say, we used to have a saying when Charles Nenner speaks, it pays for you to listen. So I want to thank you. Anything else that you want to bring up, Charles? We've covered a lot of stuff here today.
No, I don't think everybody should be short-term too worried. I just like to advance, because usually I don't talk like this. But I really think everybody's underestimating what trouble the world is in, and it's sometimes good to think about it.
Well, we want most of my clients are families and small businesses, and they're all looking for something that they can do to protect their families. They don't, a lot of them just don't understand what the turmoil is, but they understand that there is turmoil. They don't know why, but they certainly know what. And so let's just reiterate that. So we've got higher interest rates coming for us. We've got maybe a Fed that's probably going to raise interest rates, maybe not half a point, but a quarter of a point. We have civil disruption coming along. We have a war cycle, a major war cycle coming. We have the equity market is in turmoil for the next 60, 90 days for sure. And we get a little bit of a respite. And it looks like someplace that you can trade long term would be gold, and maybe take some physical gold and silver to home, and certainly don't leave it at the bank. Put this at home, and it looks like, according to your charts, that for the moment, the banks look like they're going to stabilize and things will get better, because that's I think that's chart 4. It looks like this down move is probably is completing, but that's just for the moment. This is not going to stop. And of course, you and I have talked about this. If you're being conservative and you have a huge bond portfolio or a mortgage portfolio, because a lot of these banks lend mortgages long term at 2% or 3%, and the market moves to 7%, your portfolio has taken a significant loss. And of course, this is what happens when people go insolvent. They don't have any money, and that's where you really need to pay attention to the risk.
But you also have to make a real calculation. For instance, we have an upside target already for a long time of gold 2,500. Now we're trading around 2,000. So say we talk about 20+%, and the top is in 2027. And if you put your money in interest rates, you get 4.5%, and you have 5 years, you almost have the same rate of return. So people really should think and not be enthusiastic about market moves, because maybe in the end it doesn't even pay to play it.
That's great advice. I think that's wonderful. That's perfect advice. Yeah, I would agree with that 100%. Sure. Yeah.
So again, if they want to go to charlesnenner.com, we have no interest if a market goes up or down. We don't try to convince anybody to buy or sell. We just tell you where it's going, how high it's going, how low it's going, and we'll do the timing. Not like brokerage firms who have to buy in order to make commissions, or banks who try to draw you in all kinds of constructive ideas. Try it for 4 weeks. It's for free. Go to the website and maybe you like it.
Yeah, and I'm going to give you an endorsement, because you send me your research, and it's just phenomenal. I mean, it's just I look forward to getting up in the morning and reading your research. It's just terrific. And there's absolutely no obligation if they want to take it 30 days. I've had several of my clients that just love your research, Charles. They just love your research. Well, listen, I want to thank you so very, very much. Let's stay in contact and see how we're doing with this. My very, very best to you. Any final thoughts that you want before we sign off? We've been at a long time.
Well, the only thing is, if you get the research, you can tell people an idea if the home builders go up and down. And then I don't know how you go in derivatives, but then you can help them to hedge their homes or their malls or whatever they have. It's maybe an idea if they come to you.
Yes, we've talked about that, Charles, and it's just a great way to do that, particularly if you have a portfolio. A lot of my investors have a fairly sizable portfolio. We've discussed that with them, and it's just a great way to do that. We also have a unique thing. Here's just an aside for that, is that we have a lot of immigration into the United States. It's just adding a lot of population to our country. We have a shortage of homes. And then we've got a lot more people coming here. So we're almost up to 6.5 million homes that we're short. So I feel pretty good about it long term, but I think we've got a pretty good correction in the meantime, based on a lot of the work that you do. So I want to thank you for all that you've done for me. I think you've done wonderful. Any other final thoughts, Charles?
No. But there's a lot of turmoil coming up. Then contact me and we do follow up.
I know you do. Yep. All right. Well, listen, we've been on a long time, so thank you so very, very much for being with us. My very, very best to you. Let's stay in contact and let's do a follow-up and see how we did. My very best to you guys. Bye-bye now.
Thank you. Be well.